Welcome to the Block and Tackle Show, hosted by Karl Block. Karl is a partner in the law firm of Loeb and Loeb here in Los Angeles, California. He will be tackling some of the biggest issues in business today. Listen, learn, and enjoy as he leaves no stone unturned during deep conversations with some of today's most amazing business leaders. Welcome to the show.
Hi, everyone. Welcome to today's version of the Block and Tackle Show. I'm very pleased on this episode to have a special guest, Giovanni Caruso. Giovanni is a partner of mine at Loeb and Loeb, where he specializes in corporate and securities matters. He does a lot of work with the Securities Exchange Acts, Sarbanes-Oxley, other things, and in connections with securities issuances, he's represented issuers, underwriters, and other interested parties. He's a great guy, super knowledgeable, and I'm very excited to have him. So Giovanni, welcome to the show.
Thanks for having me, Karl. It's great to be here.
Perfect. So what we wanted to talk about on this show, and just sort of as a preface, we are both attorneys, and today we're not giving legal advice, but we're just sort of talking about recent developments. And of course, if anybody watching the show has legal questions that come up, we can talk about that at the end of the show. But we're not developing attorney-client relationships with anybody watching or listening right now. We're just basically giving you updates and talking about some of these updates with respect to the Securities and Exchange Commission. So with that preamble, we really wanted to just talk about recent developments this year, things of note that people who are interested in or involved in the public securities markets should know about. And Giovanni did an amazing job of helping develop a really good outline of what's happening. And I think the first thing we're going to talk about in terms of SEC enforcement is BF Borgers. So Giovanni, why don't you tell us about this incredibly egregious case and what the SEC did?
So this was actually really interesting situation. It's the first time that I can remember that the SEC actually completely shut down an auditor and effectively terminated their ability to practice before the SEC and basically left its clients scrambling to find new auditors. Now, in fairness to the SEC, there were a lot of problems with BF Borgers, at least based on the settlement arrangement between Borgers and the SEC. Nonetheless, BF Borgers represented something like 350 public company clients who, without any notice whatsoever, were forced to find alternative auditors.
And I'm familiar with the matter. And what struck me is these are small cap companies for the most part.
Sure.
But the idea, and I'm just speculating, this part wasn't clear to me, that his company basically must have had the price being right for the audits. And so did a lot of copy or cut and paste work on every audit to keep the fees down and, to provide these to the SEC. And of course, when that happens, the potential for what's in the filings being seriously misleading is very, very high.
Absolutely. No, and it's very clear that there were some really egregious practices at the auditor, including not supervising appropriately, including people, with auditors. There are usually multiple layers of review that the auditors have to go through, and apparently there was one person providing sign-off for multiple people who would usually have to review an audit. So there were a lot of problems with the auditor.
And I think, what some people may not realize, and especially these people that hired him, getting a new auditor, it means you have to go back and check everything that they've ever done for you. And then there's always the risk of securities litigation arising from these misleading filings, right?
Oh, absolutely. Right. One of the major things that basically all these companies have to do is go back and re-audit all their previous financial statements. And yes, if somebody goes back and finds something that's wrong, they could result in a restatement and, as you said, potential litigation. So it potentially a huge problem for these companies.
And also potentially for the signer from the company side, right? Who may have put something out there that he or she knew or should have known was misleading. There could be consequences.
Sure. Yeah, for the CEO and the CFO, and if there was anyone else providing certifications to the management team, absolutely. There could be liability against those persons. It'll be interesting to see as this plays out over time, because this happened. I think it was about May of this year. So we've not seen the full consequences of what's going to happen.
Yeah, and you probably know, once they get into this investigation, if there is one, it's possible the people on the board or the people in the C-suite could be banned in connection with the investigation from working in public companies. So this is not a simple cut and paste, oh, we'll just pay a fine and this could all go away. It may be much more serious than that.
Sure, it absolutely could. The question is, right, whether this is just the auditor not following its internal procedures, or whether the companies had some, had something that they should have been able to identify as a problem. And that's probably what's going to direct whether somebody has liability or not. And maybe in some cases there's not going to be any problem at all, right? It's possible that the financial statements were just fine for the vast majority of these companies, but there's absolutely the potential for any number of them of litigation and for action against the CEO and CFO.
Yeah, and we're not saying that we're not attributing anything. We're just saying sometimes in situations like this where there's a bad audit, sometimes it's more than just a bad audit.
That absolutely true. Hopefully not. And this was, what was so unusual about this was that it basically invalidated the audits for 350 companies that it was that Borgers was providing services for. Yeah, the SEC did say that companies did not need to go back and re-audit immediately, but on a go-forward basis, right, when they file a registration statement for their next 10K, all of that information was going to have to be re-audited. So there's it's going to be interesting to see what happens with those.
Now, this was a very big case in terms of the number of companies that use them. Do you think that the SEC is really becoming more vigilant about this now, or do you think they just found a bad actor? What do you see?
I think this was a particularly egregious situation. I think they've had investigations against a number of other auditors for a variety of violations. Nothing that has risen to this level. But certainly we've had situations over the last 2 to 3 years where certain auditors were investigated by the SEC and then had to put in additional procedures in place in order to satisfy the SEC so that they wouldn't get further investigated. So I do think that the SEC is being more vigilant with respect to how auditors are conducting their audits on public companies. But I'm hopeful that something this egregious, where an auditor is, essentially put out of business, is a one-off, just because it was such a bad situation.
No, I get it, and I mean, and I think reading between the lines, it's fair to say the SEC doesn't start out heavy-handed, maximum penalties. They follow the facts, and with a lot of accounting firms where they may be investigating, the violations, if any, can be significantly less significant. But this one was just
absolutely, yeah. This one was just far and away something that I haven't seen before since I've been practicing.
I get it. And the other, of course, things are, and it's not mentioned in anything that they've published. The people that worked for him, are they going to be able to get jobs in auditing firms? Is this going to be a stain on them? So there's a lot of, maybe foreseeable consequences, but things people didn't think about. And it could have ramifications just beyond this particular company. And it's sad that it happened, but I mean, you got to follow the rules.
Yeah, no, absolutely. And you're right. You have to wonder about the accountants who are working there and what they're going to put on their resume, and they're looking for another job. Yeah, no, it's a bad situation all around.
Definitely. Okay, so let's turn to crypto then, which, in the outside of the SEC context, I see people with very, very strong feelings on both sides. You have people worried about people in crypto violating the Bank Secrecy Act, other, potential Patriot Act violations. You have certain people in banking who don't like crypto because they don't think it's regulated enough. And there's a concern, tremendous concern, about the actors who are in it and whether there's money laundering, whether it's used in connection with criminal enterprises, spying, and all kinds of things. And so it's a very, very interesting area. And then the SEC, and by the way, I'm just going to pause and say this. It's amazing to me when people in various industry segments don't think about securities issues. So for example, if somebody was in real estate and wanted to get 100 investors, they don't think about securities law. They just think about real estate law. And I'm sure some of the people who created crypto and who do business in crypto maybe never viscerally said, wait a minute, is this a security? And it's understandably confusing to me to give the benefit of the doubt to some people in the space, because we don't think of dollars or euros as securities. And yet some people actually intend this at times to be a method of commerce where you'd say, what's the securities?
Right.
But then there are issuances, again, people who invest in crypto companies. Wait a minute, if I'm investing in a crypto exchange, aren't there securities issues there? When it comes to certain things, and I guess maybe now's a good time for us to talk about the Howey test, and you can talk about how it is that the SEC takes the position that crypto and businesses touching crypto can be involved in the securities business. I don't think that a lot of people really understand the test, and I don't think a lot of people actually appreciate that, what it means when you buy something to make a profit with the expectation of it, that it becomes a security. So why don't you just briefly talk about that and how it fits in the crypto world?
Sure, absolutely. And I, just to touch on something that you said, I completely agree. I think when crypto companies started to do initial coin offerings, I don't know that they were. I don't know that they believed that they were violating the securities laws. They were. They thought they weren't issuing a security, and they probably did not do a very significant analysis on that. But I think the SEC has made clear over the last, 4 or 5 years that the vast majority of crypto issuances are probably going to be considered securities, and that should be sort of the default analysis, unless there's a really good argument that they're not securities. Now, the Howey test is sort of the basic the basic test for determining whether something is a security or not a security. And there are basically 4 parts to the Howey test. It's an investment with the expectation of profits in a common enterprise that relies on the efforts of others. So, taking those four elements, right? Investment of money, it's pretty clear, right? You're taking you're taking cash and you're buying something, right? Let's take a stock, for example, right? You're taking money and you're buying common stock in Apple in the market, right? You're investing that money. You're expecting to profit from it, right? You're looking for that Apple stock to go up, right? You're not buying it to go down. You're not buying it to
unless you're shorting,
right? Unless you're shorting, but even then, you're still expecting profits one way or the other, right?
100%.
Right? You're not expecting it to go up, but you're expecting to profit from your investment in some way. It's in a common enterprise, which means that you're investing with others in something. Let's call it, Apple. In the case of Apple, it's that business, right? So you're investing with a group to move an enterprise forward, and in reliance on the efforts of others really means that you're a passive investor, right? And when you're buying the common stock, you're not actively involved in that business. So, right, you're relying on the efforts of the CEO, the CFO, the board of directors, of the others who are actually actively involved in that business. And that's, I took sort of the easiest example, right? A share of common stock is clearly a security. But the SEC applies these same standards when looking at a crypto situation. So with crypto, let's take something that probably is not a security, right? If you look at, for example, Bitcoin, right? And I think most people, I think even the SEC does not think that Bitcoin is a security. And under the Howey analysis, right, it's when you buy Bitcoin, you are investing money, right? That's clear. You're probably expecting profits, right? You're expecting that the Bitcoin to go up, or at least possibly to go up, right? You could also be buying Bitcoin to use as a currency to buy some services or goods.
Sure.
But at least in theory, you could be expecting to buy it for profits. But here's where it falls apart for something like Bitcoin, right? There is no common enterprise, right? There's not a business behind it, right? Bitcoin is just that. It is just a decentralized, really a decentralized monetary system, right? There's not a business standing behind it. And it's not in reliance on the efforts of others, right? You're not expecting somebody to do something with that business to increase the value of Bitcoin, right? Bitcoin sort of fluctuates based on market reaction,
sure,
but not because, in the example of Apple, whether it's profitable, it's not profitable, new products, things like that. So Bitcoin is sort of the exception to a cryptocurrency being a security because it fails those last two elements.
Yes.
Most crypto, however, right, is there is an investment there's an investment. You're expecting to profit from it, right? You're expecting the value of it to go up. It's usually involving a company, right? There's usually a company behind a new crypto offering that's trying to develop something, to put something forward, and there's usually, right, you're relying on that management team to do, market, develop something, move something forward that will increase the value of that cryptocurrency. And that's really the distinction, right? It's between Bitcoin and something else that's backed by a company. There's a common enterprise, right? There's sort of, it's an investment in a company, and you're expecting the management team of the company to be doing something.
That makes sense. And so again, not everybody thinks about that, but and then and I suppose the interesting issue is what happens if we're talking about NFTs or something, which may have commercial uses. That's why this whole field is fascinating to me. And I would say it's not the only field, and beyond the scope of this podcast, though, that where government is trying to catch up with the realities on the ground.
Oh, absolutely.
And not always in a perfect way. And I'm not sure whether a lot of people, and you may see more of this than I do, actually can tell whether something has a commercial application or will, or something, where there's going to be a recognized exchange for the token to be used in business. It's just very, very interesting to me. And, maybe they just don't think about this, but it's clearly a hot button for the SEC, right?
Oh, absolutely. One of the things that causes, the SEC to really scrutinize a company is some involvement in cryptocurrency, and they are bringing a lot of resources to bear on reviewing companies, determining whether there are any securities violations, determining whether the companies are engaging in legal activities, even in situations where they are using blockchain technology for something that's not necessarily crypto related, but just some technology that they're using for smart contracts, for example, things like that. The SEC is really, really scrutinizing companies that do these. So companies are spending a lot more time and effort with the SEC review process.
Which is great that companies are getting the memo. But I mean, for the companies that don't do a public offering or file a Reg D notice or something like that, and just do it underground, I mean, I'm told that the SEC actually tracks some of them down too.
Oh, absolutely. No, you're 100% right. I mean, there are still tons of companies that, for whatever reason, haven't gotten the memo, as you said, that if you're doing a coin offering, if you're doing a crypto offering in the US, 99 times out of 100, it should be considered a security. And the SEC is definitely targeting those companies as well. And periodically will bring suits against these companies, and they are, for the most part, winning those cases. The thing is too, we've all seen this.
to actually comply with the security, assuming you're not doing to 500 and plus investors, assuming you're dealing with accredited investors, it's really not difficult to comply with the securities laws. It's not like it triples or quadruples the cost of the transaction.
No, you're right. If you're doing a private placement,
Yeah.
You can do it pretty simply in compliance with the law. The problem with, I think, crypto and coin offerings is that part of the plan is to develop a market, right? And once you start developing a market, you're entering into a situation where compliance becomes a lot more complicated.
Sure, that's fair. That's fair. And so you think this is going to be on the radar screen for quite a while, right?
I absolutely. Look, the SEC has been targeting crypto companies for, probably the last 4 or 5 years, and I don't see any of that slackening. And companies that are in the business, even companies that are trying to comply, trying to do things the right way, are going to have an extra level of scrutiny on them.
Yeah, and I think what I'm about to say is going to come up more with what our next topic is going to be, AI. But people, I think one big takeaway here is securities laws apply to private transactions too. They don't just apply to public companies. And some people get tripped up on that and therefore don't actually try to find safe harbors from a regulatory or liability situation. And what's going to be hotter, cryptocurrencies or AI right now? I guess my bet would kind of be AI, and that's why I think it's going to be even greater. But no, these are things that spotting the issue is a big deal, and then you can figure out how to solve it and not be on the other side of a very frustrated regulator. It's just not where you want to be.
You're 100% correct. Better to go to regulator ahead of time than them catching you first.
Okay, so no, that's great, and I mean, I think we should all expect people everywhere, not just at law firms. If you're you're thinking about creating crypto, if you're thinking about getting more involved in crypto, you have to keep track of the securities issues. You just do. Your life is going to be a lot simpler avoiding the regulator from the sorry, I forgot situation.
100% right. This is, if you're planning to get involved with crypto, you need to talk to a lawyer and really do an analysis of whether it's going to be considered security or not.
Okay, so fantastic. Okay, so thanks for tuning in. If you want more info on the show, please visit blockandtackleshow.com, and you can also email me at Karl@blockandtackleshow.com. Thanks for tuning in.